I think the market is going, if market right now in terms of equity performance, at least over the weekend, the futures all went up and were sort of stimulated by this higher than expected tariff relief. But this is not going to, this doesn't mean that market is going to go up higher forever or for that matter during this 90-day period of time. In fact, I'd anticipate more volatilities in the market.
Let's talk about one of the other really important news stories of today. US stock prices have surged this morning after it was announced that the US will temporarily pause trade tariffs on China and vice versa. In simultaneous statements, the US Treasury Secretary Scott Bessent said US tariffs on Chinese imports will go from 145% down to 30%, whilst the Chinese Commerce Ministry said they will cut retaliatory tariffs on the US from 125% to just 10%. Both sides emphasised that this is a constructive pause and not a full deal. We are joined now by Zongyuan Zoe Liu, Fellow for China Studies at the Council of Foreign Relations and an expert in US-China economic relations, who better to speak to this afternoon. How significant do you think this tariff rollback is? Is it a real breakthrough or just another really rather tumultuous speed bump on the road?
Thank you very much for having me. I think the over the weekend, the talk in Geneva succeeded in de-escalation, delivered what the market wanted for a short-term inventory management cushion, but it's far from a comprehensive trade deal.
What are your reflections on Liberation Day now with the benefit of hindsight? Was it always the massive Trump punch that was going to lead us here? In which case, did we, and therefore the markets, overreact to it?
I do not think the market overreacted. If anything, I think the market perhaps underestimated the potential turmoil going forward and the uncertainties in terms of how unexpected event may derail U.S.-China trade talk going forward. But I have to say, the way of how tariffs were communicated to the market, delivered to U.S. friends and allies, has sent out a significant wave of not just chaos, but also perhaps undermine the role of the U.S. dollar, not just in the short run, but also in the long run, as well as U.S. credibility. And then on the other hand, the fact that this Liberation Day tariff, especially with targeting China, right? And we hear Secretary Bessent talked about there are 14 key countries. And then there is China. You know, if the goal is to build a tariff wall against China, then unfortunately, over the weekend, the U.S.-China trade talk probably is going to make it harder for the United States to work with the allies to separate China.
Yeah. I mean, it's so interesting watching this play out, isn't it? And the way that Donald Trump's personality is such a key part of all of this. His need to be the biggest cat in the room, for everybody else to be bowing down before him. From the UK's perspective, many people in this country think that our Prime Minister, Sir Keir Starmer, is putting on the best performance of his life in doing exactly that in front of Trump. But it is different for China, isn't it? I can't imagine the Chinese president being able to or wanting to perform that role. Can you?
I think you're absolutely right. There is a significant leadership style difference and asymmetry between the two countries, as well as in terms of how the tariff back and forth tit for tat has played out. On the one hand, President Trump has fashioned himself as the chief negotiator, the best deal maker on the planet, and every single deal has to be vocally and visibly him, and he command the media and all that. But this is not the way how President Xi Jinping in China governance. So far he has not directly made any comment on tariff, and not just that. He also has been maintaining a kind of imperial aloofness. That's the way I describe it. The idea is that he projects stability. He projects as the gatekeeper, the defender of the Chinese nation, and he is the person going to lead China to become to revitalize. So from that perspective, his role in terms of trade is not to negotiate with President Trump. Quite to the contrary, his job is to put his blessing on a deal negotiated by the technocrats. So far, what the U.S.-China trade talk over the weekend paved the way for a continued conversation between the two countries through a working group or working mechanism, and then eventually, hopefully, after 90 days, we will have more clear signal in terms of what kind of a trade deal that the two countries are willing to reach.
What about damage that might already have been done, though? What does this mean for Chinese firms who think, well, we just need to move our bases to markets and countries where tariffs might not be quite so harsh?
As a result of the weekend talk, the U.S. additional tariff to China is actually 10%, the same as on UK and on other countries. So from that perspective, the urgency for Chinese companies to quickly move overseas is reduced. But that doesn't mean Chinese companies are going to stop moving overseas. Quite to the contrary, we are going to continue find not just export market overseas, but also continue to invest in assembly lines and production facilities overseas, and moving entire supply chain, not just a single company, but an entire supply chain in countries that may have endure likelihood to bypass tariffs. It can be Mexico, it can be Vietnam, it can also be Morocco. And in fact, I would say Morocco is another interesting example because it has free trade agreement with the United States and the European Union. And domestic competition inside China is simply so high that the profit margin inside China is so thin that there is this domestic drive pushing Chinese companies to move overseas.
Right. I mean, that's very interesting that you mention Morocco. Are there many other countries that would fit in that middle bit of a Venn diagram between America and Europe? Would we?
I think the UK certainly could potentially be a cushioning ground between China and the United States. But manufacturing cost in the UK, unfortunately, is not as competitive as other emerging market economies.
And what do you think the markets will do next?
On the one hand, I think during this 90-day moratorium period of time, we are likely going to see Chinese export surge, part of which is driven by a purchasing spree from the United States, because for the past month, with the higher tariffs on China, a lot of U.S. purchasing orders were canceled, and container ships were not leaving from China to the United States. So this 90 days gives U.S. manufacturers a cushion period to stock up. And then on the other hand, I think the market is market right now in terms of equity performance, at least over the weekend, the futures all went up and were sort of stimulated by this higher than expected tariff relief. But this doesn't mean that market is going to go up higher forever, or for that matter during this 90-day period of time. In fact, I'd anticipate more volatilities in the market. Part of the reason is because China's trade barrier is not really in low tariffs, but in the non-tariff barriers.
Yeah. Is there a danger in that stockpiling of goods, the 90-day period? I mean, we can completely understand why America might want to buy into that. We'd be talking about pharmaceuticals, parts for cars, other metal goods. Do you think that will be so significant it will really kind of twist a little bit of the world economy for a while?
In the short run, I think in the short run, it would sort of cushion the shortage, the fear of a shortage. But the flip side of that means rising demand for containers, rising demand for shipping. It basically means there is going to be a rise in shipping cost, in logistic cost. And then on the other hand, there is also going to be a rise in storage facility. There is also going to be a rise in labor, in truck drivers. So in a short period of time, we are probably going to see price increase. This is going to be a inflationary environment. But would this going to significantly reshape global trade? Unfortunately not. If anything, I think this just solidified China's centrality in global supply chain. And the Liberation Day tariff was barely 40 days. And then the US had to start a talk with China and significantly lower the tariff back to pre-Liberation Day level.
Well, very good to have your expertise. Thank you for your time this afternoon. That is Zongyuan Zoe Liu, who is a Fellow for China Studies at the Council of Foreign Relations.